Mark, it's my obsession of the week. Despite all the geopolitical risk, what happens to euro dollar in the next 24 hours?
I think, first of all, we're going to have the jobs print as most important. I suppose going into that, we're seeing a little bit of dollar softness. We're seeing relief on the European political spectrum. That is more about what's happening in France, where I think the latest news reports suggest that Marine Le Pen's party won't get a majority. So we're seeing a little bit of relief in euro dollar softness going to non-farm payrolls. We also are confident in the disinflationary narrative in the US. And it's interesting because the last couple of years, we've turned to focus on CPI over non-farm payrolls. Now that temporarily we're confident in the disinflationary narrative in the US, we're focusing more on the jobs data. So there's more focus in this jobs print than I've seen for some time now today. People are worried whether it will kind of confirm the softness we've seen in other data prints recently. Jobs market hasn't yet crumbled, hasn't yet rolled over. So I think that setup means that we're going to this non-farm payrolls data with an asymmetric reaction function to that if it is a strong print, we might really see dollar jump and yields jump because everyone is prepared. Everyone's looking for that softness. So I think that's the dynamic for Friday. Now, as soon as we get the jobs data out of the way, we'll then go to the French election. And I think we're starting to trade this idea that the immediate story of the French election will be a bit of relief. But the longer term story here is that France is not out of the woods and there's not a longer term glimmer of hope. So sure, the relief rally may last a few days, but it's not one with legs.
We're going to get light volume today. Is that going to exacerbate the moves surrounding payrolls?
Absolutely, low liquidity is an issue. But I think we can get a little bit overexcited. That's really important for the short-term traders. It's really important for stops. It means, we shouldn't overinterpret those short-term moves. But it's not going to change the macro message we're going to take from the jobs data today or for the setup that we go into the French election. So yes, short-term traders need to be very aware that liquidity is lower than normal. But by Monday, we'll move on from that.
Mark, anything you're watching on the UK asset front? The pound is up 0.1%. We wait for gilts to open, but the futures, well, the indications suggest that they could open broadly steady. I mean, this must be all priced in, is it?
It is. And I think that's ultimately good news. You say, what am I watching from here? Look, the election's not caused any big shock to trade, which means that what we're going to move to is there a more positive narrative around the UK? And I think there is. I think the fact that we've got a government with a very clear majority that has said they're going to focus on growth. We've got some political stability now for the UK, something we've not really had for a long period of time. I think, lets people trade this narrative that, hey, the UK may be a relative stability haven in a world of geopolitical uncertainty for the next couple of years, something that's not been known for a while. And because of that, UK assets are generally quite cheap. So I think the sustainable trade here could be that UK stocks could continue to do well for the rest of this year.